and Larry Schober from Efficient Capital Management in Chicago. Larry, that good news that buyers have moved back into the commodities overnight. Any particular moves that caught your eye, or could you find any particular drivers for it all?
Well, I think the driver is that the market has found out that the Chinese have been enormous buyers of scrap copper, especially when we drop below $4 a pound, which would be about $10,000 a ton on the LME. Aggressive buyers. That said, it just seems that this economy is going to keep going, that the Chinese might even lower rates towards the end of the year, and that their economy will be more demand-focused on copper, and we can see copper prices in a long-term rally. Maybe not the short term, but definitely in the long term.
And Alan, we saw the commodities gains. We enjoy commodities gains here in Australia. Makes our day ahead look better. Did you feel that that lifted sentiment for equities there on Wall Street?
Yeah, I think so. You know, I also think if one thing's here for sure, that's the volatility in all the markets, whether it's commodity or equities, and we're seeing it. I mean, we're seeing the longs who were selling these commodities at a certain price get right back in again because they're finished selling. And sure enough, here we go, oil again, like you mentioned, almost at par again. Corn up at top, sugar back up. Gold up $16 today. So it's been a strong move, but it's not unexpected to most traders. We felt that this is just a revolving door type of trade. Once the longs got out of the way, sure enough, the shorts would get back in cover and go right back up, and that's what we're seeing.
Yeah, Larry, we've been talking about some of the hot money coming out of commodities during the sell-off. Do you get a sense of whether it's the longer-term investors getting back into some of these commodities?
You know, it seems to be, because right now it's a technical trade. You have the commodity trading advisors, the technical traders, who are looking to sell any upward spike in copper right now. Unfortunately, long term, they're going to be wrong. The big buyers, the Chinese, etc., will drive this market higher. Maybe not the futures market per se, but at least the physical market. If you've noticed in the CME copper contract, it's still in contango, which means the far-term futures are priced much higher than the near-term futures. So physical copper will be bought. They have financing deals. Most of it's tied up in bonded warehouses. If you believe, like I do, that the Chinese will get their act together, the inflation picture will cool down, there's no reason to believe that copper can't enjoy the gain it had earlier in the year.
So where does that leave gold, Larry? Give us some thoughts on the gold price then.
Okay, now gold's a whole different story, okay? Gold right now is a technical trade. It looks like 1475 is resistance. Is support. 15.25 is probably your resistance point. There's been a lot of Asian interest, demand support at 1475. But my feeling right now with gold, I hate to say this, but I happen to be a little bit bullish on gold only because of the contagion going on that hasn't been uncovered fully in Europe. I just don't trust the fact that Greece can get its act together, and the fact that the S&P last week came out and said that in order for Greece to be sustainable, they'd have to lower their bond face value by 70%. Now, if they even lowered their bond face value by 30%, that would send contagion to Germany and France like nobody's business. We'd have a correction worse than 1987. That type of banking haircut would be horrible for the euro currency, and therefore that's the only reason I would be bullish on gold.